Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I am here with my partner, Barrie Hederachi. How are you today, Barrie?
I'm doing pretty well. Thank you.
Yeah, I slept really well last night and hard because it was a up and down week, up and down, up and down, up and down. Man, it really I think the key thing is that's going to be here to stay this year, where the volatility is going to be ever present. So
It keeps you on your toes, man. That's the
absolutely.
thing.
And again, one of the things as a trader, you got to get your rest because you got to have your head straight. You can't be tired. So make sure you get your rest and rest up over the weekend for the coming week
You
because
need your
it's
sleep every night. That's for sure.
absolutely, absolutely. Well, here's the my favorite proxy for risk, I've been saying for a while, is Bitcoin. And Bitcoin's telling an interesting story right now. We've been tracking this thing, since we started doing the shows, and this grid has been, our squares here have been really good at defining the price action. And right now we're at another, last week we were at a critical point because we were coming up on this square from below. And this week we're at a critical point because we're coming at this square from above. So we are at a major decision point where if we can hold this full square, which is in, around the 41.7, 41.800 area, it's going to be bullish. And then odds will favor that we're going to push up, and maybe get to this, this half square, a little over like around 50,700. So we're at a major decision point. I think sentiment wise, it also gives us a decent read on the risk appetite of traders and investors. So I'm watching this closely over the weekend and Sunday night into Monday morning to see, are we going to hold this level or are we going to lose it and go back down and sort of favor a bigger sell-off again? What's your thoughts here on Bitcoin?
Well, I think it's bullish.
I agree.
It's on top of the square. It's had plenty of overhead to deal with, and it dealt with it. And some selling came in, but it's holding. So it's a level to watch. Your risk is low here. So let's see how we do.
Yeah. And I do think it's a decent gauge of sentiment on risk. So it has more importance than just for Bitcoin, in my opinion. Right. Let's flip it over to you and go through the big five. There's the ES.
Okay. Well, 2 weeks of a whole lot of spinning wheels, eh?
Yeah.
Basically.
A lot of chop.
All right, where to start? Let's see. I added a couple of levels. I added 43.70. A key level we've been watching is this quarter level, and we held it the week before, but we didn't hold it on Friday. Okay, so let's just say we're not as ideally it would have been, that's the perfect place to bounce off and make a higher low and move on if we're done with all this mess. Mainly because of all the old highs, right? Resistance making support now, but we kind of carved right into it. And that's kind of how the S&P moves. We always talk about how the S&P kind of pushes a little bit more than it should, or a little bit more than we expect, right? And this could be a case of that. But that being said, I posted the chart last week on Twitter, and that was before we got the break, right? And I was trying to point out this 50% line coming off the high. You see that? So ideally, if we were if the market was firm in the footing, we should have stayed above that. Okay, that's my take, just reading the structure. Now, if we go and put the same square at the bottom, at the low, then the highs are at 50%, right? We couldn't get above that for a couple of weeks. So you can say the struggle is right here, right? Between the 50% from the low and also 50% down from the high. Yeah.
It's a battle.
It's a battle, and this block is sort of that battle zone. And if the market was strong, we should have really held this, or maybe even poke a little, but then reverse and go. So I'm thinking this really changed the story a little bit. Now we're a little bit on the weaker side, but the low did come in on a quarter of the square coming off the low. So that's positive, right? We're trying to kind of read the tea leaves here. So I think for next week, it's at least through Wednesday, it's really important that we hold above, well, ideally above this quarter level. Yeah. And that's 43.93, something like that, right? 43.93, let's say. But more importantly, this 43.70. So 43.70 is a key level to watch. See if we can, if we rush down there, we need to really hold above that, because if that goes, which means a quarter is already gone, another 20 points above. So that opens up this 42.75, 42.50, and that opens up, and people panic, and then we're going to go make new lows. So that's a scenario going down. We really have to hold 43.70, I think, in the early part of the week. Otherwise, it's just going to be, we're going to break some of these levels.
I think this is a good time too, Barry, to point out that it also depends on the time frame that you're discussing, right? The bigger picture, I don't know where you are in the bigger picture, but I know bigger picture, I think we're in a bear market, and I think the bear market started and we're just getting going, we've experienced the first wave of it. Mm-hmm. But in the shorter term, like you, I think it's kind of like a coin toss here. Like that could have been a flush on Friday. If Russia doesn't invade like everyone was worried about, we might get a rally early part of the next week and bounce back into that chop zone. So the time frame really matters as well.
Well, the fact that we broke through this Friday for whatever reason, right? That's at the end of the day, that's just a break in the structure. So, we were holding between the 50s, the lower 50 went. So that's that. And so now we have to read it like that. So, and so the bottom line is, watch 43.70 level, because if that goes, we open up a lot more downside. Yeah, there's support in other levels, like 42.70. But if that goes, that really opens up probably a flush into midweek, or a good downdraft into midweek. The thing is, these lows came in pretty well. So it's possible that we, really shake out the weak hands if we're going to really take off. So that it's possible that's what's happening here. So that's something to keep in mind. But for now, I think watch 43.70, see if we can hold above that. And, we can do this double level thing that we normally do. If we can hold above 43.70 and take out, let's say 44.40 or 44.45, let's say, to the upside, then I think we can clear the way and maybe at least go test these other highs, 45.50 and 4600 level. That's kind of how I'm looking at this. So 43.70 should be held, is the one to be held if we're going to go, if the market's in a rally, and then look at this 44.45 area to be cleared. And I think if we can reverse, where we are, or a little bit lower to 43.70, and we can get above, get some traction to get above 44.45, and I think we can a little bit of a bounce, 2 or 3, 4 day bounce to start with. That should cover the week. So that's kind of what how I'm framing this. That clear?
Yeah. And what's interesting also is just looking at your chart for where you have that set from that high, in December. 45 days, the half square on timing is right at March 1st.
Right.
And we have timing there. I have timing in, all throughout March. So it's going to be interesting to see what we do going into that time frame.
Well, I'll tell you what, if this is as weak as it's looking, we could put in a low down there around March 1st. That's a real possibility, right? We could go down there and make a low and we will know if that's what's happening if these levels can't be held. Like I was saying, if we take 43.70 out, Monday, Tuesday, we can't really get above the 44.45 level. Then I think it opens up, run into not just the next Friday's OPEX, but going into the end of the month. I think that's clearly in the picture, right?
And if the other alternative is we could chop around, not necessarily rally, but just burn time until March, and then they start hitting it again there too.
Yeah, it's possible. Now, what's interesting is the high that we did get. If we go from the highs here, we did 45 high to high, so that is a cycle here. Okay, so 45 high to high calendar days is something to watch, definitely something to reckon with. And if that's the case, if we did that, then we're not going to clear these levels that we talked about.
And it should take out that 43.70 too.
That's right. So that's, when I'm talking about this, I'm looking at all of that and try to summarize in a way that's practical, right? That's actionable. So we come down to like a couple of levels to sort of frame it and then look for the balance look at the market to see which way the momentum shifts. So anyway, we do have that 45 calendar day high to high, so that's something to watch. And the way we know if that cycle of high to high has traction is to see if these levels will be taken out or not, right? So
exactly,
we'll deal with it that way. It's a simpler way to deal with it. Looking at the weekly, well, not much clearer than last week because we basically did the same range. So what are you going to have to say about that?
Looks like almost the same bar too.
Same, almost looks like that. So in a bigger picture, you're talking about your bear market scenario. Well, we had the first 1 bar counter trend. And if we can't, if it's a 1 bar counter trend, we go make new lows, like let's say early next week, this is a bearish setup.
Huge bearish.
Okay, so not to panic anybody, but that's what it is. And how do we know that? Well, we're going to gauge it by looking to see if these levels be held. 43.70 and this 44.45 could be taken out. So that simplifies the entire complex into just 2 levels in which we know which way it's going. All right. You want anything to add anything, or we're good?
No, that's a great framework right there.
All right, thanks. Let's look at bonds. Kind of doing what we thought.
Tricky devil.
Yeah. Well, it's slow moving, right? It's a little bit like those Bugs Bunny cartoons with the Bugs Bunny races with that turtle.
Right.
So, look, last week we talked about this 53.19 being a sort of a key level, and if it can't be held, we're probably going to go lower. Well, it wasn't held, and it couldn't get above it, and we sold off. So I think any idea of this being done, I would have to see this 53.19 be taken out. I think that would be the major resistance to turn this thing around. At least the first, sort of the first signs of it. Otherwise, the ideal lows should come in right at the square, around 49, 149. If we can get to 149, that would complete that cycle. And I'd be, I could rest easy. We'd be done with that. We'll have to see how that goes.
Yeah, I'm on alert for a potential false break in bonds on Friday. There was a big reversal intraday, so
yeah.
Not saying it's going to happen, but at least something to be aware of and something to watch.
So just to get a bigger picture, looking at the high bottom 144 degrees down was fairly good. We held it through here. We kind of battled it here and kind of lost the battle. So I just can't see just walking back and just retaking this right away. If anything, like you said earlier about the S&P, we might consolidate here.
That's what I'm thinking.
Either way, this 53.19 is the number to watch next week if you guys are watching the bonds, and that'll sort of give us the balance. Because we know it's weaker, we know it can go a little lower to hit the square. And if it
Classic
does,
move would be to come back and test that 144, wouldn't it? That's classic
up
sort
here,
of. Yeah, that you
yeah.
had set from that high. That
Mhm, mhm.
if it comes back, lets everybody think, oh, the move lower is over, and it just comes back, tests it, and then goes.
Yeah, it'll be right into here, right? So
Exactly.
possible. And yeah, so that's the other level. We'll watch that as we go. But for right now, what's at hand is this 53.19 is what's sort of right around the corner, right? So
Mhm.
let's watch that for now. And looking at the weekly bonds, well, so we've been bearish this ever since we took out the triangle.
Mhm.
And we were looking for it to go and at least take this out, make a false break. Well, we actually just took it out. The false break really didn't pan out. So to me, this looks like a real break. And basis the weekly. I mean, there's certainly room to run. But let's just see if we can clear this area without a whole lot of struggle. And so for now, the weekly is basically down. There's there's downside available. Not to say that we can't counter trend, a couple of days and then turn back down.
Mhm.
So on the weekly basis, the real balance point is right here. That's why it's highlighted as 158.28.
That half square. Yep.
Right. So if we're going to be bullish here, for me, long term anyway, we'd have to really take this out and get on top of it. Then we can see what we can manage. But anything less than that or any counter trend, I mean, weekly basis, look, if we get it 2 weeks up, that's just a 2 bar counter trend.
That's what I think we're going to see.
So it's bearish here. There's nothing.
No question. Higher time frames, monthly, weekly is very bearish in bonds.
Right. And we haven't really hit a good square, a good level to call it a corner. So if we have to go with that for now. So that would be bonds. We have more to go. We talked about 149, 153 being the upside resistance.
Mm-hmm.
Well, back on to crude.
The ever ready bunny, man, just keeps going.
Yep. So we talked about 91 last week. Well, we got above it. So I think we're clear to 96.
Yeah.
Just $3 more is nothing, right? Just
right. Could do that Sunday night.
Sunday night. Well, the quarter line of the square of 90 is 95.55. So it's just almost there. Now, once we get to 96, 97, given a little leeway, it is a quarter of the square. Now, to complete this whole thing, we talked about, it would have to run a full square would be 90, and that's around $106, $107. But I think we can figure out the next $10 or $15 after this 96, 97 bout here and see what we do here. And that's my take on that. I think as long as we're above 91, it's very firm. And 96, 97 is the next resistance. Now, we talked about this last week, 180 up from those lows end up being right around 96, 97 also, right?
Mm-hmm.
So it's kind of a key level. It's not to be ignored, and we're getting, really close to it.
Yep.
So it's possible all of a sudden the war is off and there's some negotiation and,
right.
all of a sudden, crude is not that hot, at least for the moment, eh? Because we
Bigger
are
picture, it still looks good.
Yeah. So we're coming into that level. So heads up, this is not at the beginning of something. It's closer to an end of something.
Right.
And looking at crude, again, closer to an end of something. So we're 90 up. Again, that's that same.
That's the weekly, right?
Yeah. So the same 180 that we saw, it's the same scale. So here it's around $97 is 97. Figure you push a little 98. So it's right there. And we're really close to it. And we've been bullish from probably this low here. And actually, and we've been riding this this square for the longest time. So it should get, when price gets there, that would be the first time we'll have to really call it a critical level or major level, right?
Mm-hmm.
And looks like we could be doing, 3 drives coming into that. So this is also something to watch. And you don't really see 3 drives going into a weekly every day.
Mm-hmm.
So there's 1, 2, 3, and you guys can look at your momentum indicators and see if we're getting divergence over here, which it probably is on this third leg, at least between these two, because this is running hard, right?
Mm-hmm.
So between the 3 drives going into a 90-degree level, yeah, I think we could have some. This dog might hunt on the downside after it's done. We'll see.
It's definitely time to pay attention.
Yeah, definitely time. And so be careful. You're going to see all kinds of headlines calling for $150 oil, right? Everybody jumps in and we turn.
That's right.
So watch it. So watch those levels. These are decent levels.
Mm-hmm.
So that would be crude. Let's go on to gold. Hey, how about that?
Started shining a little bit this week.
How about that? How about coming from these humble lows here? I mean, this is good. I wish, it must be nice to watch it every week because you can see how price is working through the same chart, right? The same fork, same levels, just
and the stealthy way of these higher lows. I mean, if people can pick up on anything when you're looking at charts, is just notice that it's not, it's not any fantastic indicator. It's not some fancy, sophisticated algorithm. It's just higher lows.
Right.
But it's big and it's significant.
Yes. So here we are. We if you guys have been watching and following this, we were watching the lower fork holding, and we were calling for support. We had support at the quarter line here, went up to the half, came back, and we held, and the fork held. So
at another higher low.
The higher lows entire time. So, and these are great lessons too. Somebody was saying, hey, I learn a lot from watching the videos you guys make, and it's true. If you just follow the story every week, there's a lot of ideas on how to watch structure and how to sort of gauge the patterns. And so anyway, last week we talked about 1765 key support. Resistance was 1832, and if we clear 1832, of course we had that half square to deal with, by 1850. Once we clear that, it opens up, to go up and at least test 19s, let's say.
Mm-hmm.
So we could do it. Watch 1832 for support. We really need to hold above that. Even if it pulls it back a little, we really want to see it above it to be on the bullish side. On the short term, right? Long term, it's really this trend line, and we have these other levels. But for now, it's 1832 should be held, and the breakout to the upside, really settling above 1850, 53 is, sort of the launching pad for leg higher. So we'll see. Been fooled before, like over here. So you got to watch this closely.
Absolutely.
And looking at the weekly, big old triangle here, looks like a big carrot. Okay.
Mm-hmm.
So square 52, let's take a look kind of where we are. All right. So this square has been working really well, right? You can look at this square 52 here, provided all kinds of support on the way up. And we hit the half square, came back down to the half square. So that was 52 degree correction. All technically, this chart is super, solid. Now look to the upside. What we have to deal with is we're sitting under this, 104 degrees on a weekly chart. Those 2 squares up is a big deal. 1878 would be sort of the level to break out on a weekly basis.
Mm-hmm.
Okay. Now, if that breaks out and, we can kind of settle in that area, up in here, then I think we can trend a little higher. For now, we're not quite there. This line is solid. So figure, let's call it 1881, right?
Mm-hmm.
1881 is the 2 squares up from the low. And if you go up to the high, you can see this 1881 becomes a half 50% point, just like we were looking at in the S&P.
Mm-hmm.
So long as we're under that, even though we squared out, we didn't square out, we found support at the full square. we really haven't been able to take out the half square. You see, it's really been between the quarter of the square and
the
the
half.
half. We've been there for, almost a year now. So I think it's time we, make a run for it at some point.
Yeah.
But looking at this, you guys, it's easy to see the frame. All right. So we have the quarter square is around, 1780, let's say. And up here is 1880. So that's a bracket on a quarter on a weekly basis to take out. And when we get through those levels, it's going to be, they're bigger moves. So, and you can see the compression is really getting tight now. And well, let's see how it goes.
Place your bets.
Place your bets. Let's look at the dollar. So here again, we're using square at 90. We're up. We've been testing the 45 line, which is 50% of the square. And, it's holding it fairly well, right? Bounce. We're in there. And looks like the trend, you can see it's starting to break the trend line. So the momentum is clearly dying out a little bit. It's slowing down. So it's possible we consolidate. Now, look, long as we're consolidating above the half square, it's on firm ground. So you can almost think of it in terms of accumulation. Dollar's still strong, and we could go higher from here. And the half square is right around 95, let's just say. Anything you want to add there?
No, it looks good. And as long as we're above that half square, it's hard to be bearish the dollar.
Yeah. And we really didn't quite, square out to the upside. It would have been. We did 60 degrees up, but it's fairly steady here. And
it looks like that 180 timing, brought at least a short-term end to this, to the move up, but it doesn't mean we're going down. It looks like we might chop for a little bit.
Yeah, or just gain some momentum. So long as 95, we're holding 95, which was a long time target. When we were down here, that's the thing to watch. So looking at a 60 square, which it could be running because you can see how well the 50 is holding. Again, it's holding above the quarter of the square here, so that's fairly bullish. All right, let's take a quick look at the weekly. So weekly's been interesting. Getting a little wild here, eh? Look at this, all this ripping around a little.
It's getting jammed into a tight spot, basically.
Yeah, and the tight spot is above the 50% square. Again, we use these to help us sort of frame the structure, and it's holding really well above that. Again, long as it's above here, we're open to go up and checking up at the 90 level, and we could do it. Let's see. Well, let's take a look at the euro weekly while we're here. So last week and the week before, we talked about any retest going up to the 50% of the square.
There it is.
And that being the resistance. Yeah. And there it is.
How about that false break too?
Yeah. It's all
on the
there,
way
right?
Down.
Yeah. Over here, you mean?
Yeah. The low.
Yeah, definitely false break there. And what a head fake up here, right?
Yeah.
Now, if you didn't know, you'd think like, hey, we look at that reversal, we're just going to rally off of it. But we know the half square is right there and stalled out. So again, it definitely gives some credence to a little bit more sideways and consolidation there.
Yep.
Yeah, that goes. Daily euro. Well, speaking of consolidation, that's the range that we had marked off. And we're coming right back in. We went to explore a little bit, right? A little bit of seek and destroy.
Yeah.
Leave the farm for a couple of weeks. Okay, so a couple of days. So we ran down, finished up, came back up, finished up. Now we're back in the fray.
Wow.
So it could be more chopping here. So you got to be careful in the box. I think now you have to kind of wait for the extremes to trade this. Otherwise,
I mean, look at the false breaks on the top, on the bottom, on the top. I mean, good God.
Yeah, yeah. I mean, just whipping the little guys around like nobody
Totally.
business. Like it
Totally.
did it here, right? Low, false break, right? It did it there, did it there, did
I
it
mean,
here.
just outside of your box, look at your box. Every time it goes outside the box, it false
He
breaks.
just whips back. Yeah, yeah, yeah. It's a rough. It's a rough market if you don't know where the levels are.
Absolutely.
And yeah, that's what I have. I think we're covered everything.
Okay.
Throw it back to you. Cover all the commodities,
Good
and if you guys
coverage.
like, you guys are watching this. If you guys like what we're doing, please hit the like button, hit the bell for to be notified when we put up new videos, and share it if you know other traders that might benefit. So we appreciate that.
Mm-hmm. The interesting thing about my chart review this week is that most of the commodities are either correcting or counter trending. So there's not a lot that I think that by my criteria is really actionable. So we're going to review some of the markets that I think there are opportunities in, and then and we'll start with the NQs. NQs, as you know, has been weaker than the ES. It's been one of the weakest markets in terms of the equities. I think only the Russell maybe is weaker. But we were on this for months as we kept banging up against this full square, and we couldn't clear it. We couldn't clear it. We couldn't clear it. And so it was a sign that, traders, investors weren't willing to really push anymore. And of course, then we get the push down. The low came in on this full square. We had the first rip higher to the top of the square. Now we've been kind of oscillating around this half square in I think it's around 15,000 area. I drew in this ABC because I see a possibility that this is maybe what we're doing. The low Friday was right on this trend line. As long as that low holds, and then we got way stations along the way where we can check this out. The next thing is, can we clear the half square? If we clear the half square, can we clear the full square? Then if we clear the full square, we open up and we can potentially reach this target up here. If Sunday night we gap down on the futures and it can't recover, obviously this is over and this whole scenario is out the window. But this is a possibility. And that's one of the reasons why I'm watching, Bitcoin to see if Bitcoin can hold as a gauge of risk, and then watching the bonds because the NQs have been trading. If the bonds are down, NQs are down. So if bonds can catch a bid, we'll watch and see if NQs can catch a bid. Again, this is all sort of tactical. Bigger picture, it's still, in my opinion, still bearish. I think we got a lot more work to do on the downside here. But I'm looking at this from sort of a tactical potential and see if things line up. There could be a decent upside trade here, short term. Where are you on the NQs, Barry?
Pretty much on the same wagon, I guess. Not much to do at this point. We're kind of in the middle of everything. Mm-hmm. So if we resolve to the upside, fine. We got the counter trend that way. If we resolve to the downside, I think then we'll have to play that as a corner. But either way, I feel like next week, if we really can't mount a counter trend, we could just be get real weak in a hurry.
Absolutely, because again, the next thing is if we lose this level, then we have to look here, right? If we can't hold the lows, we got to look to this, like around 14,000 area. Because if we lose that, then it's next level half square, next level full square.
If we lose that, we know markets don't do double bottoms all the time. So
no.
So it's going to be. So we'll see. Yeah,
we'll see. All right, let's go to.
And in bear markets, that triangle there, you have a little triangle working up in the NQ.
Mm-hmm.
It's a little wide, but boy, those things can break to the downside in a really bad way. So,
agreed. Barrie covered gold. I just wanted to give sort of my perspective on it. We've broken triangles on daily and a monthly wedge. We broke. I covered the monthlies last week in a video, and we were in a wedge there. The upside targets for the daily triangle is 1973, which interestingly is near that area that you were talking about, Barrie, that 1980 as a possible resistance and target. So we've got a lot of upside here in gold. The monthly wedge target, bigger picture, is like 2170 area. The key thing for me, we broke out of the triangle. That's important, but I want to see this 1835 hold on any pullback. If it doesn't hold, it means we're back winding up again, and we're going to bounce around in here or even go down and break to the downside. But if we can hold this level, the half square is next, right? That's 19 and a quarter. That's the next shot. So 1835 is key. We'll be watching that, making sure we hold that level, and then playing for, the 1925 as the next stop. But I like gold. I think gold looks good. Longer term, as I said, on the monthly, that wedge break, targets new highs at, 2170. So I'm bullish on gold longer term. Silver. And so you may be looking at the chart and go, well, why are you posting silver? We're just still in the middle of this big giant triangle. Well, we are, but the thing I wanted to point out with silver is if you look at where the apex of the triangle is roughly, it's our full square. And we got to close above the full square. If you look last week, it's hard to see, but the last week the close was at the bottom of the bar. Or I'm sorry, that's on Thursday. We closed at the bottom of the bar below the full square. And on Friday, we closed at the top of the bar and most importantly, above the full square. And that's in like 23 and a quarter area. So if we can hold above 23 and a quarter and gold holds that 1935 area or 1835 area, half square looks good for silver. $25. And again, bigger picture, it's very bullish. We showed how the monthly was doing this sort of consolidation on top of the breakout. So it's all bullish. What we're trying to do is sort of zero in on when these things are gonna take off, so we can participate in this move like on a daily or 4-hour basis. Here, the pattern again, similar to gold. We made a low, we made a higher low, we made a double bottom. So you call that a higher low from here. So it's not, even though it's been frustrating, it's not making lower lows, and it's pushing. So I believe the odds favor we're going to see the breakout. The first sign would be holding this full square, which will give us signs that we should have the energy to break out through the triangle, and then the next decision point is going to be up here around $25. If we can clear that, then we're looking at the full square around 26 and 3/4. What are your thoughts on silver, Barrie?
Well, I think that's a good call. We get over the half square using that structure we have. I think 25 should be like the minimum.
Yeah, we should see it pretty quickly. The last one I want to cover is a soft that I covered last week, and that's cocoa. Cocoa has been in a massive triangle. If you look at it on the monthlies, which we reviewed, and the monthly videos are up on our page, so you can go back and check it. We broke out of the monthly triangle, a weekly triangle, and we broke, importantly, on the daily, we broke above this full square in the 2700 area. Again, the pattern, which you like to see, you got a low, you got a higher low, you got another higher low, and you got a fourth higher low. That's what you want to see, right? And here, because this is the move you're looking for, which generally comes, after you get a series of these lows. I think we're early in this move, but what we want to watch is on any pullback, can we hold this full square?
Right.
Can we stay above 2,700? If we do, we're above all of this. going back, over a year on a daily basis. And that right now our target is the half square, which is around 2884. And then if we can get above that, we're looking at the full square, about 3060. On the bigger picture, the weekly triangle target is 3484, and the monthly triangle target is 4350. So needless to say, we're bullish on cocoa. As long as we hold this 2700 area, we're super bullish on cocoa. And cocoa has momentum. I mean, this kind of structure is conducive to momentum. So we're seeing momentum kick in. And there could be and I don't know what's going on in the fundamentals of the cocoa market, but there could be a very, very explosive move coming in cocoa. I know you've been on cocoa as well, Barrie. Anything else you have to add?
Well, I think that 27, watch that on it's the counter. Once the market's moving, it's all about the counter, trading the counter trends. So I think watch that 27 level and we'll see how it goes.
Something else to notice in the chart. See this gap here?
Mm-hmm.
That's acceleration.
Right.
When you're looking at the commodities, especially the ones that don't trade 24 hours a day, you can get these gaps when they really start going. And we've got one here. So that's a sign that people really wanted to own it, and they bid it up on the open the next day after this big up bar. So that's a sign of acceleration. It's a sign of momentum, and it's a sign of a market that's trending. And that's what we try to do, and what we try to point out here is how to find the markets that are about to trend. And given that everything else that I follow, I follow about 16 different commodities. Most of them are either, making new highs or correcting, coming off of a new high. And so there's nothing else really that I want to highlight that is actionable. But I think the ones that the gold, the silver, and the cocoa really look attractive. Cocoa being with the biggest acceleration move right now, considering it just broke out on the monthly. So markets are moving. I'm watching risk this week for potential counter trend. If Bitcoin gives us a signal of holding that full square that we talked about, and NQs and ES don't make significantly lower lows than Friday, we might see another counter trend and some more chop there. So watch your levels and make sure you're got a good risk reward in your favor if you're trading. What else are you looking at, Barrie, this week?
Well, the S&P, bonds, gold, crude, key markets, those are all kind of at important levels.
To say the least. Yep.
Yeah. So yeah, that's it. I mean, we talked about them. Just be ready for those. They could move really hard into the next leg. So transition points, a lot of them.
Amen to that. All right, everybody, have a great week. Good job, Barrie, and have a good week, and we'll see you soon.
Thanks, Ben. Take care, everybody.
All right. Bye-bye.